Welcome back. We're still live in the Nigeria2015 studios here on Channels Television, and we're taking a look and analyzing the new CEO of the enterprise called Nigeria Inc. According to Bismarck Ryan, we have Nigeria Incorporated. Yes, that's what we're talking about. We're analyzing everything about the next CEO of Nigeria Incorporated. We're now being joined on set by the Assistant Director and Head of Mergers and Acquisition at the Securities and Exchange Commission, Bassi. Mr. Bassi, thank you so much for joining this panel of strong men, like I like to call them. And we're taking a look at the markets now. And Mr. Rwani, this is something, we've been very anxious to talk about. In the last couple of weeks, in the run-up to the elections, during the campaigns and the rest of it, we noticed that the market still stayed very green. And from your analysis, with regards to this new CEO who's coming in to take over this enterprise called Nigeria Incorporated, on investment level, you're staying neutral. Let's talk about the markets.
Why do I say neutral? There are three distinct investor groups. One are retail, who are widows and orphans. Then you have domestic institutional investors, and you have the international institutional investors. International institutional investors were waiting to see direction, to see that there's no uncertainty, to see that there's no violence after the elections. The domestic institutional investors have nowhere else to put their money anyway, so they are there. So what we're looking at is that it's neutral because we have another set of elections on the 11th of April. We still have Boko Haram, and we have 2 months in which the current administration will be there before the new administration will come in. So people want to say, okay, where's the transition team? What's the direction? Where are the tea leaves pointing to? That is why it's neutral. When it is clear that this will be market reform-oriented but Nigeria-centric policies, then you see the markets are going to come in, and we're going to have a deluge of investments, both domestically and internationally.
So at the heart of this reforms, as it were, you say there has to be a little more domesticated, indigenous, as it were,
Absolutely.
to lift people here out of poverty, create wealth, and make sure that people benefit from their resources. So let's talk to Bassi for a little bit. Where does the M&A come into this? Very quickly, M&A is supposed to broaden the market space, as it were, and investments. We've seen this in the banking industry. It consolidates, but also expected to spread wealth, as it were. Now, why do you think the market needs new set of rules for mergers and acquisitions?
We need a robust and efficient regulation framework for the market to be effective. Once before, we have a set of rules that have some gaps. The recent rules that we have, exposed is to make it more easier, more efficient, and reduce the approval timeline, and equally encourage the consolidations of business within Nigerian sectors.
Bismarck, give us your thought about this. I'm sure you have your fingers in M&As as well in Nigeria. You deal in assets, you advise companies as well. Advisory is one of the things that financial derivatives do. Talk to us about the space for M&As in the last couple of years. Outside the banking sector, we've seen a few in the brewery sector, one or two within the FMCG as well. Talk to us about.
See, industries either fragment or consolidate. Consolidation happens when there's pressure on the sector and big players consolidate. As long as you're not going to a monopolistic situation, it's good. Now, the reality is that the rules for consolidation have to be very clear, as pointed out by Bassi. And we've seen massive consolidation in the insurance space, which people have not noticed. There are a lot of new insurance companies coming in from outside who are buying huge stakes. And
those are takeovers, another leg of the M&A.
Yeah, absolutely. And then there are some that are just actually, you saw what happened AXA and Lancet. We've seen a few others, and there are going to be more. The insurance space in every economy is typically either bigger or definitely not less in size than the banking sector. But the insurance space in Nigeria is so minuscule. So that tells you the potential. In the FMCG, there's also consolidation. Some happening in the telco infrastructure space. So there's going to be a lot of mergers and acquisitions to position these industries to be both domestically and internationally competitive.
But when we have such M&As coming up on a large scale, would that not also mean we'll have so many more unemployed in the market?
Maybe Bassett should have. Maybe Bassett should have.
Yes.
No, it doesn't mean so. You know, consolidation is to reposition companies, reposition business. It encourages financial stability, diversification, and economy of scale. Sometimes it may lead to, you know, a kind of little bit of unemployment, but certainly it helps in economic growth.
Yeah, because you know you're going to have duplication of duties and responsibilities, and so when you have organizations merging like that, they might have to let some.
Definitely. In the short run, there definitely be some blood on the street. There's no question about that. You can't make
what happened in the banking sector.
You can't make omelette without breaking eggs, so there's no question, and there'll be collateral damage. But that's short run. Medium term, a consolidated industry always gives more to society than before consolidation. In the sense that aggregate output from that sector is going to improve, aggregate profitability in that sector, and the ability of the sector to reinvest and hire more people, to outsource through the value chain, is actually increases. So I think it's a natural sequence, right? Because the sector, if the sector becomes more competitive, if it remains uncompetitive, the entire sector will die rather than out of fragmentation, rather than consolidating, surviving, growing, and becoming more and more competitive.
Yeah, no, so Mr. Bassey, looking at those rules that we know that SEC wants to come up, this new proposed rules in terms of where we are at the moment and what we're dealing with and what we're looking at, what are those key highlights to ensure that the consolidation actually works in everybody's favor?
The major one is the collapse of M&A structure. Initially, we have 3 stages of M&A: notification stage, clearance of scheme, and formal approval. That has been reduced into 2, where you have notification and formal approval. And the time frame for approval will now be reduced. Initially, in the law, you are given up to 40 to 60 days for approving M&A transaction. With this new rule, you are certain within 1 month, if all things being equal, that is, submissions of required documents, that such transaction will receive approval from SEC.
In terms of, I'm sure M&A is one of areas, and I know Bismarck here, you're the head of this department at the SEC. You know, M&A is a lot of heavy documentations in terms of what notifications with the SEC, yes, as the chief architect or the midwife of M&As, but of course the stock exchange involved. It's about transparency and disclosure that are needed to be sure that no one play games among both parties, and that not just the big-time investors, but the retail guys in the market are not unduly gamed out of an M&A. Does this new rules take care of this?
That is the reason for this new rule. That's why I say robust and efficient regulatory framework for disclosure requirement. That is what the new rule is all about. Take care of the minority shareholders and equally take care of the majority shareholders.
What the process? The robust is a very big.
Disclosure requirement.
Yeah, what are the new rules? Who do you have to disclose to? You disclose to SEC, or how does the stock exchange come in?
In the new rule, you talk about the scheme of merger. The scheme of merger is like a prospectus, our information memorandum, where all the information that relates to the M&A transactions, the employee, the shareholders, and the general public, financial, legal, litigation, claims, material contract are disclosed. So in that information, it has to be robust, it has to be comprehensive, full disclosure.
Now, is there a need to notify the stock exchange or the stock market through the floor?
Yes, the reason for that, if you look at our act, there's a provision for that. What we do with the new rule was to align the provision of the rules with the act, so that notifications, because some people look at the rules, not looking at the act. So we brought some of those provisions to the rules, to be able to reduce unconfirmed rumor on price movement. So there is that need for notification.
But, Bismarck, you're comfortable with some of these provisions as you're hearing them? No, I'm sure you would have seen it.
No, we act as financial advisors and we advise a number of companies. The most important thing is the issue that the retail investors and investors in general must not be shortchanged. You don't buy things that you don't know or that this manipulated information is put there. So the Security and Exchange Commission actually protect public interest. And the stock exchange also, because it could be a merger between two quoted companies. It could be a merger between one quoted company and another. It could be an unquoted company taking over a quoted company. There are so many interests that are, but you see, some other things are, what are the unpaid pension obligations? What are the unpaid tax liabilities? So the financial due diligence, technical due diligence, the legal due diligence will throw up all of these things, and it will be, this scheme of merger or arrangement will not be approved if there are issues that are unresolved, so the public doesn't get screwed.
Well, so as it is now, the markets are very, very anxious. They're looking towards, after now we're talking about May 29 going forward. We have a whole lot of economic activities planned for the rest of the year. For instance, we have the World Economic Forum Africa meeting coming up in June, and we have a new president who's going to be attending in its, representing the country. And a lot of, economists, a lot of financial ministers of finance and others will be talking about how best we can change the game in terms of how we can make the markets more accessible, looking at policies, looking at growing the key segments of the economy and the rest of it. The team has a lot of work caught up for it. But which areas? I keep coming back to those areas. Now, let's take a look at the Forex market, for instance, the interbank FX market. This morning, Bosun said that the markets are looking good, still trading and looking very strong at 199 Naira. And a lot of people are saying, hey, wait a minute, why doesn't this come down? That's the word from the street. So why don't we see it, coming down to something as low as 190 Naira to the dollar, or even the British pound coming down from as high as 325, 330 to, 1 Naira, to $1, beg your pardon.
You see, the narrative is not about the rate. The narrative is about the system that produces the rate. What has happened is that the central bank has scrapped the retail Dutch auction system, which is good, and has introduced an interbank market. The interbank market is definitely more efficient than a retail Dutch auction, as long as you sell to everybody. Nobody should be obsessed with the rate of exchange. The rates of exchange go in any direction. It is the mechanism that produces the exchange rate that we should be worried about. And once you have that working, then and the government shouldn't care less about the exchange rate. You see, money as a store of value and money as legal tender are two different things. We talked about dollarization of the economy. People are charging school fees in dollars, charging rents in dollars and all of that. The reason why they're doing that, because they're afraid that if they keep their Naira, inflation will erode it. That is why 50% of total deposit liabilities in this country today are in dollars. But the legal tender is Naira. When people now get comfortable, election risk is over, security risk begins to get managed.
And we have possible M&As coming up as well.
Then you will see that people will now be more comfortable and the Naira begins to appreciate because there's what we call an uncertainty risk premium, which is priced into the Naira, both for domestic and international users.
Very quickly, Mr. Nwani, I just want to go back to the President-elect and about the rating card that you, preliminary rating card that you just brought in this morning, very quite incisive. On investments, the investment level, he's rate neutral. Yes. So now neutral is, well, like stock analysis, go back to buy, hold, or sell.
Yeah, you can hold.
So you can hold.
Yes.
Now, from hold to buy, how do we get the new system moving forward, taking investment from neutral to a buy?
No, the thing is that where I come from, they say that the dog that is going to get lost, when you whistle to it, it will go in the wrong direction. So, in the next 2 months, President-elect, transition team are going to have to sit down, understand, and drop their priorities. The moment they announce the team and the priorities, the market will then say, okay, wow, we're going from neutral to buy, and strong buy because the potential of this economy is much, much stronger than its actual.
So what's the role of the SEC, the Stock Exchange, the Securities and Exchange Commission in the entire ramping up of the investment market, as it were?
The SEC is to protect investors and to create an environment. They've been doing that. And so that there's no stock market manipulation and the stock exchange is to deal with listed companies. And it's a long but very important journey. Bearing in mind that in 2008, everybody got massacred. Right. And so restoring confidence and then building upon it is important. I think Bassi will throw some.
Yes, because our primary mandate is development of the capital market and equally regulations of the capital market, which is very key. And we have been doing that. And we know with the new regime, we are looking at a conducive business and economic environment that will encourage mobilization of funds to the needed sector and will equally encourage saving by institution and individual, will equally encourage inflow of funds outside the country.
Mr. Wani, just sorry, Harry. In other words, if we re-engineer the economy in such a way, do you see the SEC having more to do in terms of not just M&As coming to the market, but more listings, IPOs, and
Definitely. See, stock market capitalization of Nigeria now compared to GDP is very low, right? In some countries, it's about 150% of GDP. Here, we are talking about 25% of GDP. So just to get it to 100% of GDP, which is normal, right? The number of listed companies, the assets that will be listed on the exchange and all that are there. So the regulatory framework you used may not change, but the level of activity and the supervision of these things and actual monitoring of these activities will be much more than you have today. So the SEC has its work cut out. They are going to be so busy in the next 4 or 5 years as our stock market moves from 11 trillion to about, I would suggest, maybe over 200 trillion in another 4 or 5 years.
Mr. Bismarck Urani, thank you so much for sharing your thoughts with us on the program this morning. Managing Director, Chief Executive Officer, Financial Derivatives Company Limited, and Mr. Mfonbasi, thank you so much for coming in as well. He's Assistant Director and Head of Mergers and Acquisition at the Securities and Exchange Commission, and of course, our Channels Business News Editor, Bosa Mofai. Always a pleasure to have you on the program. Of course, you know the conversation doesn't end here. Nigeria 2015 studio is still very open. We're talking political economy. We're looking at the issues. We're looking at the task ahead. Don't forget, you can continue to send in your pictures, send in your comments, and let's know what you're thinking, what you're expecting at this time. Everybody's expecting for a commonwealth to be delivered. But that's our program for now. Of course, the studio is still open. I'm Harriet Agbein. Bye-bye.